Welcome to this symposium on Islamic infrastructure investment, which you have put together in partnership with Zamir Iqbal, that I cannot help saying, that is a World Bank alumnus and now CFO of the Islamic Development Bank. Thank you for being with us. Actually, when I look around and I see a wonderful cross-section of representatives of the private sector and the public sector, and I think it is exactly the kind of blending that we need in terms of decision makers and actors, so that we can push forward this important type of product and also of topic. Because, of course, Islamic finance goes beyond specific products. And let me first begin by stressing the importance of infrastructure, especially climate-friendly, smart infrastructure for the World Bank in the context of attaining our SDGs by 2030. Infrastructure is fundamental for the welfare of people, as well as a source of a very large share of emissions. So doing it right and doing quickly, but thinking ahead is fundamental for developmental purposes. Now, it's no surprise that given the importance of infrastructure, we really want to support Islamic finance, because as many of you know, Islamic finance has several features that make it suitable for infrastructure development. In particular, of course, there is recognition of profits, but it puts a special link to fiscal assets, as well as very clear discussion of risk sharing. And it also recognizes something that's very important in infrastructure, which is the right to pay for the other fruct for using an asset after it existed. These are the key aspects that we all talk when we discuss infrastructure finance. In addition, when you think in particular about PPP, which means mobilizing a private sector capital, we find that these, say, asset-backed and the ring-fenced nature of Islamic finance really makes it a natural fit for PPPs. And also the flexibility there. Of course, we're all familiar with Sukuk, but they are not the only instruments. We have many different ways and the structures to finance with different forms of risk-taking that can really, from the beginning of the green phase, as well as later through type of, say, of leasing, that can go throughout the full cycle of an infrastructure asset. And again, also independently if this asset is kept or not in the balance sheet of the government. So I think that this flexibility also makes it easy to align and to combine Islamic finance with conventional financing when you're trying to build some infrastructure. Of course, Islamic finance by itself is a huge market now. Depending on how you measure, you're talking about $2 trillion in assets, and penetration rate that in some countries are already above 50%. In others, they're approaching 15%. But in some countries, including here in Indonesia or Turkey, you're talking less than 10%, which means there is a tremendous growth potential for this type of financing. And I think that I have a view, and I really would ask the panel that Islamic finance is not fit only for countries that are bound for Sharia for Islamic law, but also for investors in general, especially when you think about infrastructure for the reasons I mentioned, that the flexibility and the variety of ways you treat investment can also be very interesting, say, for pension funds, etc. Now, let me talk a little bit about the World Bank and what we've been doing on that. I think that we have been active not only in terms of issuing instruments, but also in our global engagement. In terms of issuing, I presume that most of you are familiar with the Sukuk, the two Sukuk that we have raised, $700 million to finance the international finance facility for immunization, which is to buy vaccines. And again, you see it's for a purpose that is global. And also, I believe, to an investor base that is also quite diversified. We're very happy with it. IFC has also structured a number of Sharia-compliant projects, including some airports in Jordan, in Arab, etc. So I think that it seems that you have news. Yes, hello. And also MIGA, I welcome the minister. And we, in terms of global engagement, we have in 2013 opened this Global Islamic Finance Development Center in Istanbul, serving as a hub for research, training, workshops, and technical assistance. The World Bank has also this hub in Malaysia, is a knowledge hub. I'm sure Alfonso can explain about that. And we continue to work very closely with industry standard setting institutions such as the Accounting and Auditing Organization for Islamic Financial Institutions and the Islamic Financial Services Board, IFSB, and with the objective to enhance its standards around the world. So this is a part of an effort to broaden the use of Islamic finance in Islamic countries as well as in other countries. And today's conversation is really on how we can attract more private investors to Islamic infrastructure finance, addressing existing policy, legal, regulatory, and institutional challenge, but also the opportunities that exist. And I have to say that the World Bank Group and the Islamic Development Bank have been working really to create financial tools and products to foster Islamic infrastructure finance, especially in terms of knowledge. We're going to hear about the key findings of our joint product called the Mobilizing Islamic Finance for Infrastructure Public-Private Partnerships. It's a report from 2017, and it really covers and has very interesting case studies that shows how you can apply Islamic finance in very different settings and very successfully. And looking forward, we will also continue to strengthen our partnership with key stakeholders such as IFSB in fostering this long-term development of Islamic finance and maximizing its contribution to reaching the Sustainable Development Goals. So let me stop here and actually have the privilege, the honor to hand over to Indonesia's Finance Minister, Her Excellency Sri Mulyani Indriati, who is a long-standing champion of the development agenda, and of course has shown that Indonesia is a very fertile ground to develop new approaches to infrastructure financing. Thank you very much. Minister.
Good afternoon to all of you, and welcome to Bali. For some of you just arrived here to participate in the World Bank IMF annual meeting. We are glad to host this meeting, and I do hope all of you is going to have a very productive meeting during this event. Excellencies, Mr. Joachim Levy, my colleague, MD, CFO of the World Bank Group, Mr. Zamir Iqbal, Vice President, CFO, Islamic Development Bank, distinguished guests, all speakers who's coming here. Assalamualaikum warahmatullahi wabarakatuh. May peace be upon us all. First of all, I would like to thank World Bank Group for initiating this event together with Islamic Development Bank for giving the symposium on Islamic infrastructure finance. We view that this event is an important initiative by both banks to assist all member countries in their economic development, particularly in the opportunity to develop infrastructure using the Islamic scheme. Many developing countries are now working to attract major private capital to finance their infrastructure project. And as all of us know and acknowledge, that with the current environment on the global economy, this is going to be much tougher job to attract more capital, private capital especially, to finance infrastructure project. To provide more alternative to suit investor appetite, the Sharia-based investment scheme is a great option to help in channeling the funding needs and funding availability between public and private sector. In several Muslim countries, Islamic finance has succeeded in mobilizing resources for infrastructure financing by providing flexibility and tailored funding for specific projects. Ladies and gentlemen, the uncertainty of global economic environment is creating quite a tremendous pressure for many developing countries, including Indonesia. We are able to maintain stability and soundness of our macroeconomic fundamental. Our growth rate still continue healthy at 5.17% in the first half of this year, and supported by all reform program by the government in order to improve the investment climate as well as increasing more productivity. The economy, while growing fast, is also stable. We achieve many important development goals, including declining in the poverty rate. This is the lowest in the history of Indonesia, below 10%, 9.8, and we will continue the decline further. We also able, while growing, reducing inequality. The Gini coefficient is actually declined for 0.4 into 0.38. And we maintain the stability and soundness of our fiscal policy. Indonesia received investment grade rating from 3 major rating agencies, Fitch, Moody's, and S&P. The upgrading on the investment rating is important for us to be able to expand investors' base and to improve the appetite to invest in Indonesia. But the challenge for Indonesia is remain with the population of 257 young demographic, and geographically we are divided into so many big islands. So accessibility as well as infrastructure is becoming very critical. For Indonesia, we are actually launching what we call it the infrastructure renaissance, because government understand that accelerating infrastructure investment will boost economic growth as well as share prosperity across region, and also attacking the hardest job of reducing poverty even further. Public spending for infrastructure development increased significantly in the last 4 years, from 163 trillion into 410. And in this case, between the 2015-2019, the government of Indonesia launching 245 national strategic projects, which the amount of investment required at 300 billion US dollar. And from this 300 US dollar, only 40% will be funded from public, including our state-owned enterprises. So with that, certainly, the need for the private sector participation is really critical and obvious. For us, it's not about whether we need to have a private participation in infrastructure development, but how we are going to be able to link as well as to invite more appetite of the private sector to get engaged with the infrastructure development. This is especially challenging because of the private sector different risk appetite as well as their preference of the instrument. That's why diversifying instrument is becoming one of the most important strategy for us to attract more private sector. Issuing government bonds, both conventional and Sharia-based bonds or sukuk, is one of those strategies. This is in line with our focus to diversifying our source of financing as well as diversifying our investor base. This is particularly important when we see that the global economy will continue to create a risk from different parts of the world. Currently, our total sovereign sukuk share in the range of 17% of total government bond portfolio. Our sovereign sukuk experienced the highest growth in the period of 2016-2017. Total accumulated issuance is 799.2 trillion. In the form of project financing sukuk, we have issued a total accumulated of 65.2 trillion, which is specifically allocated to finance the development of basic infrastructure and public services. Government of Indonesia also issued global green sukuk as a form of innovative financing. The issuance of 1.25 billion US dollar global green sukuk this year in February has marked Indonesia as the biggest global sovereign bond issuance for fund climate change. But current effort to build more infrastructure still actually remain challenging. Indonesia definitely welcome any creative and innovation financing to provide more alternative for infrastructure, for investors to suit their investment demand and risk appetite. That's why the involvement of public-private partnership scheme from many different multilateral institutions is very critical in helping us. I appreciate that the World Bank and Islamic Development Bank together jointly doing this seminar as well as supporting member country to alleviate or to overcome this kind of challenge. We also know that bringing third parties to the, in terms of their expertise, as well as know-how and management capability in the PPP is very, very important. That part of what we call it confidence building in preparing the asset class that is going to then have the ability to attract more diverse and credible, reputable investors globally. Indonesia has adopted PPP framework in several infrastructure projects to benefit from private sector participation. The government developed robust policy framework and instrument to support the implementation of PPP. Since we started about 12 years ago when I was finance minister then, into today, the PPP, both scheme, infrastructure, and institutional setup has been developed very, very rapidly. The Ministry of Finance, we established to promote PPP, the institution like Indonesia Infrastructure Guarantee Fund, PT Sarana Multi Infrastructure or PTSMI, PT Indonesia Infrastructure Finance or IIF. The three entities played significant roles in delivering PPP initiative. The Ministry of Finance also provide an attractive formula financing instrument in order for us to be able to fill the gap between the risk appetite of the private sector investors. Usually their risk appetite is very low, while the risk of the project is high. So to fill this bridging the gap between the risk appetite of the potential investor with the real risk of the infrastructure is the job of the government, so that we are going to be able to invite more. And that is being done through many instruments: project development facility, viability gap fund, government guarantee, as well as availability payment. These are instruments that we've already developed. Looking forward, I think for Indonesia to expand more the Shariah-based financing in the PPP in Indonesia is a very, very promising. This is not only because that we are more and more familiar and from the legal point of view, structure of the financing as well as the transaction, but also at the same time, the ability to prepare project that is going to comply with the Sharia base is becoming more and more skillful. And that will provide more variety of what you call it infrastructure project that could be financed through both conventional as well as Sharia-based instrument. Given that potential Sharia-compliant finance to support infrastructure development, the job for the government today is try to learn from what we've already achieved and push further. I think the role from the institution like World Bank Group as well as the Islamic Development Bank is really critical in making this instrument to become really a natural blended instrument for all of us to use. I would like to commend the Islamic Development Bank and the World Bank for organizing this event again, and I do hope that you are going to have a very productive meeting and come up with any innovation. Of course, the government of Indonesia is always here to become one, not only just participant, but we want to contribute actively in this kind of discussion so that we are going to be able to advancing our program in building more infrastructure for the people of Indonesia in a more sustainable, prudent, and sound in the most variety of instrument that is available in the world. Thank you so much and have a very, very productive meeting.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. On behalf of the Islamic Development Bank, it is my pleasure to welcome you all here. And we thank you for accepting our invitation to participate in the joint Islamic Development Bank and World Bank Symposium on Islamic Infrastructure Finance. I would like to convey regrets from Dr. Bandar Hajar, the president of the Islamic Development Bank, who is looking forward to be here, but unfortunately due to unforeseen reasons could not join us today. The annual global investments in infrastructure is currently standing at around 2.5 billion of US dollars. While this amount is quite significant, it is considerably smaller than the estimated demand of infrastructure investment by the various countries, which is estimated at 3.3 trillion of US dollars annually. Meaning there is a gap of around 800 billion of US dollars between the actual amount of investments and expected requirement. Looking forward, countries globally are expected to need around 90 trillion in infrastructure investments over the next 15 years, which would translate into an annual investment of 5 to 6 trillion of US dollars in cities, in transport systems, in energy systems, water and sanitation and telecommunications. Essentially, the higher needs require doubling the current infrastructure spending of 2 to 3 trillion per year. The situation in the 57 member countries of the Islamic Development Bank, which with a combined population of more than 1.6 billion people, is particularly unique. This is because these countries have been facing years of pent-up deficits in infrastructure, thereby inhibiting their ability to exploit their full development potential. In the context of sustainable development goals, development of infrastructure is very critical for our member countries. Governments and international multilateral institutions cannot alone bridge this financing deficit, and it is crucial to crowd in the private sector funds to meet the financing shortfall. For this, the Islamic Development Bank is expanding its resource mobilization efforts, leveraging on its available resources and network to support its members towards closing the infrastructure financing gap by reaching out to traditional as well as non-traditional development partners. In this context, the Islamic Development Bank is actively involved in the organization of the annual Global Infrastructure Forum, which aims to enhance coordination among multilateral development banks and their development partners to better formulate sustainable, accessible, resilient, and quality infrastructure for developing countries, and focuses on how governments and their working partners can attract more resources for infrastructure. The Islamic Development Bank has also decided last year to initiate the Public-Private Partnership Forum, reflecting its belief of the advanced business model of the PPP in helping increase private sector investments in economic and social areas, with the objective of meeting the community's needs for goods and services through innovative financing methodology. This is added to our other forum, which was launched 4 years ago, which is the IDB member country Sovereign Wealth Funds Forum, which also aims at increasing the flowing of investments in long-term projects. As you know, the issue of public-private partnerships receives substantial attention from governments around the world due to the revelation that economic and social growth processes are dependent on the gathering of a community's capabilities, including energy, expertise, and resources. These capabilities are acquired through both the public and private sectors in order to participate in institutional organizations responsible for establishing and operating various kinds of projects. The latter occurred after separate and independent institutional organizations faced difficulties and challenges in achieving their desired ambitious development goals. Taking Africa as an example, where more than half of our members are located, the Islamic Development Bank estimates an annual funding gap in the investment in infrastructure of between 87 and 112 billion annually of US dollars. The continual lack of well-prepared and well-structured projects remains, we believe, a barrier for investments in this sector. In Asia, where about 2/3 of the member countries' population live, around 600 million people are outside the population's supply network. More than 360 million are without safe drinking water, and around 1.7 billion are without sanitation facilities. At the global level, a number of countries lack the necessary financial resources to meet the infrastructural needs of their population. More importantly, infrastructure projects are highly complex in terms of technical, environmental, financial, and legal aspects. Most of the members' governments lack the technical and administrative resources to develop new infrastructure projects or maintain them after construction. Countries can be helped to overcome such obstacles by allowing the government and government-owned entities to cooperate with the private sector through public-private partnerships. And by doing so, the public sector can gain expertise in the field of infrastructure and eventually will be able to take a greater role in developing and operating infrastructure projects. The public sector would then export and acquire expertise by attaining joint ventures, both locally and internationally. We all know that ensuring the success of a partnership is not limited to legislations and regulations. Successful links need to be created between the parties of the partnership contract. This is due to the fact that both parties have multiple dimensions in common, including administrative, legal, economic, and social aspects. With these commonalities in mind, creating links should be based on the principles of transparency, disclosure, accountability, and equal rights for stakeholders, as well as identifying responsibilities in order to raise the efficiency of resource usage and to enhance competitiveness, to attract funds, and expand projects in order to create new job opportunities and support economic stability for the member countries. Over the past 2 decades, Islamic finance has emerged as one of the important sources of finance for a wide variety of infrastructure projects through both the public sector and the public-private partnership schemes. In particular, Islamic finance offers to the prospect of widening the sources of financing needed to meet the massive infrastructure investments in developing countries, including but not limited to Muslim-majority countries. Islamic finance can play a significant role in closing the gap of infrastructure due to their natural fit, given its advocacy for risk-sharing finance as well as asset-backed nature of modes of financing. Recent joint publication of the Islamic Development Bank and the World Bank on Islamic infrastructure rightfully highlights the potential of Islamic finance as well as the prerequisites to make it happen. In this respect, I believe that Islamic finance could be viewed as value proposition for risk-sharing finance, which could overcome many obstacles faced by conventional project finance. We at the Islamic Development Bank have been proactive in this segment of the development sphere ever since our inception. More specifically, the bank has funded nearly $130 billion since the start of its operations, with the infrastructure sector acquiring a large share of 53%, followed by the agricultural sector and healthcare and education sectors. The bank has also, more recently, funded near $5 billion through public-private partnerships since it began using PPP mechanism. This is in addition to participating in launching a number of investment funds in the field of infrastructure, as well as other vital sectors such as healthcare, among others. To illustrate, the Islamic Development Bank has launched 2 large infrastructure funds to date, and we are in the process of setting up additional regional funds in Africa and Asia that have a major focus on infrastructure investments. At the same time, we are very much aware of the challenges facing the development of Islamic finance with respect to long-term investments, both at the macroeconomic and the market level. And the bank is taking a leading role in addressing such challenges. In conclusion, I believe that this event is very timely given the growing recognition of potential of Islamic finance for infrastructure finance. And I hope that this event on Islamic infrastructure finance achieves its objective and contributes to enhance further our cooperation to mobilize our resources to fill the infrastructure funding gap for developing countries. Thank you very much.
Okay, so I think that the request from all of our key speakers and keynote speakers this afternoon is very clear. There is a lot of potential, but seems that we are not there yet, that actually the market is not responding, at least with the speed that the infrastructure needs require and what we think is the potential that we have. So I'm going to ask you directly to the panel, because I think that this is we have the pleasure to have a great mix of public and private sector represented in this panel. We have a regulator, we have two private representatives from the private sector, and we have a development bank. So basically we have what one can think all the parts that are needed in order to make it happen. No? And actually one of the questions that we will ask is why this is not really happening, or what is needed in order to advancing at least with a higher speed than what we have had as of now. So with me in the panel, let me introduce the four speakers that we will have in the panel. Ms. Nur Haida, who is the Vice Chairman of OJK, Financial Service Authorities of Indonesia. Welcome. Mr. Simon Cooper, CEO of Corporate and Institutional Banking in Standard Chartered Bank. Ms. Ingrid Van Vees, Vice President for Finance and Risk Management in the Asian Development Bank. And Dr. Abdulaziz Al-Hirai, Chief Executive Officer of the Oman Development Bank. So let me start with, let's say, the regulator, with Ms. Nur Haida. And I'm going to ask you, Ms. Nur Haida, one very, I would say, simple question, no? Which is, what are the main regulatory issues that actually matters when we think on promoting Islamic finance for infrastructure? And is there anything really different on the regulatory framework from conventional financing that we should be aware of, or that we should work on when thinking on how to expand Islamic finance for infrastructure?
Well, thank you very much. Good afternoon, everyone. To that question, I go directly to explain that regulatory, basically, we don't have any significant issue except for taxation. But what we have in our market right now is that the market itself is still developing. So if you look at the infrastructure financing in Indonesia, especially for Indonesia, we have financing for infrastructure from two sectors, banking and capital market. What we have the issue on banking sectors is that the capacity of our Islamic banks for infrastructure financing through Islamic scheme is still limited, meaning that capability of the bank individually is very limited. Then we also have another issue is that the product itself, Islamic products that can be issued by banks or other institutions is very limited. And we have to expand the type of instruments that we can offer to the market. And then also we know that infrastructure projects usually have a large financing. We have to have a big financing, and also the financing for infrastructure project is a long period in financing. So there is, if we are talking about banking, Islamic banking, to provide instruments or financing for infrastructure projects, there are two kind of issues. First is the capacity of the bank, and the other one is mismatch between the maturity of the instrument itself with the source of funding that banks have. That's from the banking sector. But if you look at another sector, is that from the capital market, the Islamic finance from capital market we can get through sukuk issuance. Sukuk issuance in Indonesia are very developed, but in terms of the size is still small. And what is the challenge actually? The challenge is that we have a lack of experience or lack of knowledge of the players and also the public. Players mean the issuers of the sukuk. Some public or players in the markets believe that issuing sukuk is very complicated, and they also think that costly. And one false understanding of the market is that when they issue sukuk, they have to be Sharia compliant, the issuer itself. But it's not. That's not the right perception, because sukuk can be issued by not Islamic or Sharia compliance companies, but the usage of the proceeds has to be Islamic compliance. That's another issue. And also, as I mentioned, the taxation issue. We have to be very clear on the taxation policy for the sukuk. And then the last issue is that liquidity. Because the sukuk itself is not that big yet in our market, so liquidity is not there yet. So what we need to have is that how can we expand the liquidity in the market by encouraging more issuance of sukuk, so that the secondary market for sukuks can be more attractive, especially for global investors. I think I'll stop there.
Thanks very much. I think very good remarks, and actually opens the floor perfectly well for Simon to actually explain from the private sector, from a Standard Chartered Bank, why the sukuk market is not better developed. Actually, Standard Chartered Bank is one of the main players, I guess, in the sukuk and in the international markets. But it is true that there is a lack of liquidity, probably lack of enough capabilities in many of the private sector, or at least knowledge of the product, and maybe these are constraints. But tell us your views from the private and the banking industry and the banking sector. No? What is needed in order to develop even more the sukuk market?
Okay, thanks for the opportunity. So I guess firstly, I mean, Standard Chartered has its Islamic business under the brand Sadiq, which comes from the Islamic for truthful, which I think is quite a good link into actually what you're talking about in terms of how we can develop the whole Sharia finance to be more widely recognized with greater participation. We've heard about the tremendous need for financing and the tremendous gap that I think Sharia financing can fill. And I thought, before I go specifically to Indonesia and what we can do to promote it, it was worth looking at perhaps a case study of what works well and why a structure is well perceived. And just as an example, we recently worked with Finco in Dubai to look at a facility which was about $3 billion, dual tranche, conventional and Islamic, to support the financing of the Dubai airport. What did we learn from that from a banker's perspective? Firstly, we learned that we could tap more liquidity than just relying on a conventional structure. So Noor Islamic, Dubai Islamic, Abu Dhabi Islamic Bank all participated in the Islamic tranche, and they couldn't have participated in the conventional tranche. So there's a pool of liquidity that by creating instruments like this you can tap into, and that liquidity meant the deal was oversubscribed, and it meant the pricing was tighter. So there's an issuer advantage as well. When you then look and come back to the question about how we can do more, I think it's worth contrasting some of the markets of, in particular, the Middle East, and coming back to Indonesia. So in Saudi Arabia, 51% of the market is already Islamic. Here in Indonesia, we're at 5%. And when you think that we've got the highest number of Sharia-compliant institutions in Indonesia, we've got to ask ourselves why it is, and in particular, why is it that we've heard from Her Excellency the Finance Minister. I think Indonesia has done a tremendous amount in terms of pioneering Sharia finance. But why is it that we're still at 5%? So what more, again, from the private sector, do we need to do? And I thought the first thing was the regulatory framework. So although we've got a regulatory framework for sovereign issuance, and Indonesia has been pioneering in terms of its annual sukuk issuance, I think there's an opportunity to develop more of a framework for corporate financing in the Islamic space. So onshore and offshore in the form of bank financing and sukuk, so that we really start to treat Islamic finance in exactly the same way as we treat conventional. And to your point, taxes and equality, I think, is important. I think there's an opportunity as well to start driving some of the quasi-sovereign entities to look at Islamic financing solutions, to really push and promote them to raise funds again onshore and offshore in the Islamic space. And I think there's an opportunity for the government to look at tax breaks, things like low-cost government deposits, to really start to stimulate the industry, because everything points to both a massive need, but also a tremendous untapped potential. That I don't think it takes much to push it along, given what's already happened. I mean, you've set up the National Committee for Sharia Finance. You've got a target now that the President announced to get to 15% of Islamic financing by 2023. So there's a lot of momentum. I think it's just at the tipping point of pushing it along.
Thank you, Mr. Cooper. Very good insights from what is needed from the private sector. No, but let me turn now to Ingrid Van Ves and ask her what is the role of the MDBs. No, what can we really do, and what has the ADB done so far? Because the ADB has been very active in the ESG market, no, as one of the main financiers, and the Islamic finance somehow is related or actually complies well with the same type of requirements. So what is the vision from ADB on what we can do as MDBs? And especially my question would be related to the instruments that we have. No? We were hearing from Ms. Nurhaida that actually the instruments is one of the main challenges, that we probably do not have the instruments that are really needed in order to tap the market. What are your views on this regard?
Thank you, Alfonso. First of all, good morning, distinguished panelists, ladies and gentlemen. My comments are in three parts. First, the relevance of Islamic finance for Asia and the region, then the role of MDBs, and then I will give some examples of instruments we have been using to date. Asia is home to around 60% of the world's Muslims and is the forefront of development of Islamic finance. ADB has 14 member countries that have a majority Muslim population and has 5 of 10 countries with the biggest Muslim population globally. A majority of the population in many Asian countries are Muslim, including Pakistan, 96%, Bangladesh, 86%, Indonesia, 87%, and Malaysia, 61%. In some other Asian countries, the Muslim population is a minority, but still sizable. In India, 14.2% of the population makes up 172 million people, which is still a significant amount. Islamic finance has grown rapidly over the past decade. As we heard from our fellow speakers earlier, Islamic finance or shari'ah-compliant financing is one of the fastest growing segments of the global finance system. Asia's Islamic banking assets have been growing at a compounded average growth rate of 17%, and we expect it to continue to grow at this fast pace. So what are the drivers? One of the drivers is the rapidly expanding Muslim population and the improving living standards that result in savings that can be used for infrastructure and other investments. The strong political will by various Asian governments, for example, to diversify the fund base. And also by tapping into the liquidity from international countries, oil and commodity producing countries, but also mobilizing the resources, the domestic resources from unbanked parts of the population, people who are voluntarily opting out of the conventional financing system. Last but not least, the different mode of risk sharing, and some of the Islamic products are complementary to the ones of conventional finance. Asia and the Pacific is the worst affected region by climate change. In 2017, ADB estimated that developing Asia and the Pacific region will need to invest 1.7 trillion per year until 2030. In total, that makes up $26 trillion. Islamic finance is particularly well suited to bridge the infrastructure funding gap given its asset-backed nature, as already commented upon earlier. So what's the relevance of MDBs for Islamic finance? From ADB's experiences in supporting the development of Islamic infrastructure finance in the region, I believe multilateral development financial institutions with their holistic approach, combining finance, knowledge and partnerships, have various means to mobilize resources for Sharia-compliant, ESG-oriented infrastructure investments. Now, we can play three roles. We can directly participate in the capital markets for Islamic products by issuing sukuks. IFC has done so, and as we heard earlier, the World Bank has done so as well. We can create demonstration projects with innovative financial structures. And these are good initiatives, and these are things we definitely should do. But we can't really move the lever by doing these initiatives. And I think the real catalyst comes from capacity building. It's what we heard already in the speeches given by the people from Indonesia. Capacity building in the industry. It starts with the government, it ends with financial institutions, but it also has to do with financial literacy of the demand side of the market, but also of the development of new products, which we need to develop the markets in full. So what does need to happen? First of all, building the government and institutional level capacity to mainstream Islamic finance. This means supervisory, regulatory frameworks. Second one is appropriate Islamic finance infrastructure supporting Islamic finance banking, but also capital market development. Here we're talking about the availability of liquidity instruments, but also access to hedging instruments, for example, to deal with FX risk. A third point is standardization of documentation to achieve cost neutrality with conventional banking. To mainstream in Islamic finance, it would be most powerful to implement regional level of compliance, allowing for cross-border flows and investments that go beyond the domestic market. And we need to create a level playing field and create a conducive environment. That's part of government's role, but it's also, when we talk about a level playing field, we're also thinking about tax equality and cost equality with regard to legal documentation. On the demand side, as I mentioned earlier, Islamic finance literacy, and also setting examples so people know what's happening at the moment. Now I get to the examples. Given it has the most impact, I start with the technical assistance for government capacity building. Thereafter, I will talk about two demonstration projects showing risk mitigation and the dual usage of Islamic finance and conventional in one structure. I still have time? Good. We start with the technical assistance. What we've done for Indonesia, we are implementing a technical assistance on enhancing a regulatory framework for financial sector development and oversight, which supports the government and the Financial Service Authority to develop Islamic finance. Focus points are develop tax neutrality, both VAT and income tax, for issuances of corporate sukuk. The second point is strengthening the regulator's capacity to implement prudential standards as issued by the Islamic Financial Services Board. And third, to conduct a sector assessment on Islamic finance in Indonesia to understand current challenges and how ADB can further support to address them through our operations. In Kazakhstan, for example, ADB supports the Astana International Finance Center in the development of Islamic finance regulations. It was established under the decree of President of Kazakhstan. The development of Islamic finance has been identified as one of its core functions. The AIFC aims to become a global hub for Islamic finance, creating favorable conditions for the establishment and operation of Islamic financial institutions within Kazakhstan. Third, when we talk about regional cooperation, we have a regional technical assistance to help the governments of Afghanistan, Kazakhstan, Kyrgyz Republic, Pakistan and Tajikistan, so mainly Central Asia, to develop their respective Islamic finance industries. Through Islamic finance-related legal and regulatory reforms, capacity building for governmental, regulatory and private sector entities to strengthen their ability to develop, regulate and deliver Islamic financial services, and last but not least, improve Islamic financial literacy, the public understanding of Islamic financial services. Last example is the Philippines. We are supporting a gap analysis to first identify which rules and regulations are required. Then we come to the formulation of Islamic finance-related rules and regulations, capacity develop of the government, and assist the government in drafting the rules and regulations for Islamic finance.
Thank you. Thank you very much, Ingrid. So let's move to the investor side again, to the private sector and institutional investors. So, Dr. Abdulaziz Al-Hinai, my question is more related to how can we really attract institutional investors? I mean, what is your experience from Oman as one of the main drivers to make this market work, and what is pending? So, what else do you think should be done from the institutional side and from the regulatory side or from the governmental side to move this market quicker and in the direction that we all would like it to be?
Thank you. I would speak from an oil-based economy perspective, so to speak about Oman and the GCC. As you all know that in the past, the GCC economies were a financer of infrastructure by having the surplus resources being deposited in the banks and institutions all over the world to build infrastructure. Now times came when they are in need for resources, so it's the opposite, to attract resources from overseas to invest in various growing demand for infrastructure. As you know, oil-based economies are getting their income from one source of income, which is oil. Fluctuation in oil prices always affect adversely the development plans, including infrastructure building, and GCC is in that respect now. The drop in oil prices in the past 3 years really affected the various infrastructure plans, and definitely an alternative mode of financing should be brought. Therefore, infrastructure financing need to be looked at differently in the future of these oil-based economies. Just to give you an example, because we are oil-based economies, we are always accused of being a rentier state. The government has to provide the services, including infrastructure, by all cost, by all means. So sometimes prioritization is not based on the income generated by this infrastructure, but rather on developmental plans that are based on politics, and especially local politics. Therefore, governments of the region has to think seriously of privatizing some of the services that they are doing right now. Privatization plans for the GCC countries was not very successful in the past 25 years. So there's a transformation from a ministry structure into a state-owned enterprise. So the electrification used to be provided as a service by the Ministry of Electricity. Now it's provided by the company for that electricity, but it's only the name change. The whole company is owned by the government. Therefore, I think privatization efforts has to be speeded further to attract institutional investors to these infrastructure projects. So I will start by saying that diversification away from the economy should be complemented with privatization. Regulation has to be altered to attract private and especially institutional investors. The government cannot own all of these infrastructure provision facilities. Give a chance to the private sector to manage and own some of these facilities, especially the easy sectors such as telecommunication, electricity, water, and other services. The problem is that governments wanted to start by privatizing the money-losing projects, which is not attractive to institutional investors. Also, any infrastructure financing by the government to be given to an institutional investor, I believe it should be blended into a mix of projects, because an institutional investor will not be attractive to a road that has very low traffic. So probably a creation of a fund where we give them a road and give them a telecommunication and give them an electricity generation and electricity transportation together as a blend. So bundle projects together to make it attractive for investors rather than in a form of a fund, rather than giving them a road takes you to nowhere where there's no traffic and no income will be generated from the toll road if you establish a toll road. Am I done with time-wise?
No. Actually, I was tempted to ask you a question related to what you are mentioning.
Interrupt me.
Because to me sounds very appealing, but I mean, do you really think that there are institutional investors with enough capacity and with the, I would say, investing policy that allows them to enter into this type of funds with so many different sectors that actually are very different in nature?
Actually,
and therefore
the way has to be paved by the state. I'm not asking the institutional investor to do all of this. It's the role of the state. Now in shortage of funds, I'm not really, I'm worried about the use of Islamic finance for the budget deficits financing. This is what we have been doing in the past 3 years. We're competing for issuing sukuk. Each of the countries are really producing lots of sukuk, but to do what with it is to pay for the deficit rather than pay salaries, rather than make feasible projects attractive for foreign investments. Therefore, there's a role of the state to pave the way to make the environment attractive for the foreign investors, especially the institutional investors, in terms of regulation, in terms of deepening the capital markets, in terms of exiting from these projects, because there are projects, but there's no clear exit policies. There are also deficiencies in terms of designing and making studies for projects to be feasible. So there's a failure also of the state from doing so. An institutional investor will come to a sector that is less complicated. That's a preference. More complicated sectors should be invested in by the state itself. So an institutional investor, whether it's conventional or Islamic, needs good governance, clear regulation, and definitely, I believe privatization is the way to attract institutional investors in various sectors in these countries, whether it's a direct equity or long-term sukuk issuance, or creation of special funds, or specifically issued sukuk for projects that have a clear income and cash flow, and also mitigation for currency risk and so on. All of these will make the institutional investors attractive. Institutional investors will come for low risk and reasonable income projects, and unless those two conditions are met,
Yeah.
definitely.
I'm going to give the floor to Simon because he wants to step in and
No,
tell us.
I want to add actually to what Abdulaziz has just been talking about, because I think he's absolutely right. And actually, I think I'm going to give you a plug in a minute in terms of the World Bank as well. I think another thing the governments can consider doing, particularly governments of Islamic countries, is actually making portfolio compositions mandatory to make large financial institutions have Islamic capacity, Islamic funds, to stimulate that awareness and the demand that Abdulaziz is talking about. And then I was going to just flip a little bit to the investor perspective, because from my perspective, the real key to stimulate investor demand for Islamic products is familiarity. And exactly as you say, getting consistency of regulation clearly helps that. And once you've done that, I mean, we were saying outside, I mean, an Islamic facility, it's another product. I mean, there should be no difference in terms of treatment in investors' minds as long as they're comfortable and they're treated consistently. One thing that I think is potentially burdensome at the moment is the tenor. So typically Islamic institutions have relatively short-term liquidity, and we're talking about projects which are typically long-term in nature when we're looking at infrastructure. So I think promoting insurance, which are typically longer-term in perspective, and developing the Islamic insurance market will, I think, stimulate much more in terms of long-term investor appetite for Islamic or Sharia compliance products. And I think that will be a catalyst for the growth we're talking about. And then I was going to give you the plug for the World Bank. I think one of the interesting innovations that you've really pioneered, thankfully alongside us, is looking at how you can effectively give some partial credit insurance. And, the transaction with the government of Pakistan, where the World Bank came in and gave some partial credit insurance, again is a great way to stimulate a broader investor base for something that's fundamentally attractive, but gets over that hurdle of potentially tenor and country risk or sovereign risk. So I think
actually,
there's mixed role.
this is a great point, because actually relates the Sukuk market and the need to develop this instrument with the need to have enough institutional investors on the insurance side, in this case, that can really invest in this product with an Islamic perspective. No? But I think that, so we are mixing both things, which is good, because at the end of the day, we need the supply and the demand, because you were referring about the lack of bankable projects. No? The problem that we have in many countries with enough bankable projects that can actually give the yield or the return, however we want to measure it, either to Islamic or to the conventional investor. No? But there is an issue with the bankable projects and the capacity to actually structure these projects in a way that will make them attractive for investors. And the second one is, if the investors, what is the instrument that they are using in order to come into this market? No? Either conventional or Sharia compliant. It doesn't matter from the infrastructure point of view. No? It matters from the financial sector perspective. No? But I think this is a good point. But I will come back, Simon, to you and our colleague from Oman to think or to discuss the sectorial thing. No? I mean, what are the sectors that can actually fit better? Because this tenure and the maturity of the potential investment is critical, in my view, and this can actually make that not all the sectors initially could be actually equally attractive, I would say, or equally easy to be put for the Islamic finance, and there are some sectors that maybe are more suited. At the beginning, this is just a question, it's a reflection that is coming from what you have, both of you have mentioned. If there are some sectors that are more suited for this type of instruments than others, given the limitations in terms of tenure.
If I go further, from my perspective, if you look at the Middle East, I would say the PPP structures around water and power are pretty widely understood. And I think they're the sectors within infrastructure that lend themselves to development and more progress on the Islamic side. Africa, probably slightly more on the power side. I mean, we've done work with Power Africa, looking again at how you develop an IPP model for project finance. But from my perspective, focusing on that, as you said, Abdulaziz, the fact that the project is ring-fenced, the fact it's got a stable source of cash flows coming forwards, And in both of those instances, they're projects that have actually definable benefit for not just the economy, but social benefit as well, which I think lends itself very much to the whole Sharia ethos.
So, no, Ms.
Okay, I think for Indonesia, we see more on the needs of the country rather than what kind of products. I mean, it's good to think of what kind of products that can be attractive for investor, whether global investors or for domestic investors. But for Indonesia case, we need a lot of infrastructure, maybe toll roads or harbors or anything that can increase the economic growth. So in Indonesia, the government, I'm speaking from government point of view, we try to support the development of Islamic infrastructure finance in many different situations. The government encourage the small medium, the state-owned enterprises to issue more sukuk, meaning that why state-owned enterprises? Because we see that the risk of the state-owned enterprises is less. So hopefully this become more interesting for investor to invest in. And we also have, another support from the government is when issuer issue Islamic products through a public offering, we have a special regulation for them. In terms of levy that they have to pay, they can pay like less than the conventional one in levy to the regulators. So I think that's very important to Indonesia to see the as much as possible without seeing what kind of instruments or what kind of specific sectors that we should push to be increasing or to have more products with the private sector. But it's more on how can we encourage more domestic or even global investors to invest in our market.
And Ms. Norhaida, do you think that from a regulatory, from the regulator perspective, from your perspective, having given, we were mentioning, Joachim Levy mentioned before, and Smuliani as well, and the Vice President of the ADB, of the Islamic Development Bank, the need to actually increase the awareness, no? The need to somehow make sure that the institutional investors, the financial markets, banks understand the product well. So do you think that the practitioner's view is relevant for a regulator? Do you think that creating a community of practice, let's say that meets once every year or something like that, with practitioners where we can actually exchange this type of views and the problems that we are seeing, either from the maturity of the products, the quality of the instruments, the situation of the bankable projects and the sector needs, etc. Do you think that this would be useful from the regulatory perspective?
Certainly, I think that's very useful because in developing the Islamic finance market, I think the experience of from one to another countries is quite different. And also, as far as I know, the grade of Islamic compliance from one to another country also different. The way we see the compliance for Sharia in Indonesia probably different with the way in other countries see how is compliance in Sharia. So I think it's very important to learn from each other. If we have like practitioners meeting maybe once a year, or even maybe we should have a kind of a forum, to exchange our experience, so that the more developed markets can share their experience, and so the other part of the market can also learn from them. So they don't have to reinvent the wheel, in developing.
But this is especially interesting. What you just have said, no, that depending on the country or
Yes.
they could actually interpret different things of Sharia compliant, no, and this fragments even more the market, no, because different Islamic investors could actually have a different definition, and therefore it is not that easy to standardize the potential market instrument, no, somehow. So have you perceived, Simon, or or in Oman. Have you perceived this type of fragmentation of related to the definition of Sharia compliant?
I mean clearly from an issuing perspective, different countries and different institutions have Sharia boards that have slightly differing interpretations to the perspective of what is Sharia compliance. I think that is an area actually where the multinational organizations actually and the banks can play a role in trying to educate and harmonize some of those views, and as you say, start to share best practice. I mean, ADB is starting to do that and can do much more of that as well.
Abdulaziz, in your case?
Probably good communication on the structure of these instruments or products is always important. I remember when I have the experience of issuing the IDB Sukuk, there was some concern of some of the investors on the structure due to the lack of understanding of or translation of some of the terms. And with good communication, definitely we were successful in explaining, elaborating so good communication of the owner of that product will ease things. I mean, I don't see there's a big difference between what they call the Gulf structure from the Malaysian or Indonesian structure of a product. There are no big variance in terms of the understanding. It is only a voice of a few clerks here and there by rejecting a certain idea due to philosophical understanding or translation of these structures. But I don't see a big problem there at all.
Ingrid, in your case, because you were mentioning the need for standardizing documentation, no? And to provide more documentation, and because this is one of the big asks from the private sector, no? That there is not enough documentation about the projects, and therefore it is not easy to see how well they fit with the requirements that they may have, no? But beyond the transparency or this documentation that is needed, do you think that there is a need to standardize the concept or to standardize the perception or the way that investors see what is Sharia compliant and what is not?
I think it would be helpful, because even if there's no real insecurity, once we talk to each other, we might come to the same understanding. I think it's also the perceived insecurity that is an impediment for people to involve in these projects. It's a lot, what I think you also mentioned, it's a lot of perception, and that's currently not correct. But if we think about conventional banking, we've got LMA standards, we've got ISTA standards, and they brought us a long way in doing international banking. It brought us a long way in templating loan agreements and reducing the costs. In order to make Islamic finance at par with conventional finance, we believe that it's needed. It would be really helpful. It would take the insecurity out of the market, and it would reduce the cost for all of us. And it would basically make it more transparent, which would allow for international, inter-country money flows, which would be very beneficial.
I'm going to plug you again, actually. I think what you established, was it 2013 with Turkey, in terms of sort of research institute and trying to get this best practice in the markets that the World Bank operates in, I think is something that you can push further.
We will hear from Samir, my former colleague, who actually is one of the brains behind this standardization. But let me ask you, just to close the panel, 1 minute from each of you. How would you? What would be your ask to the international community or to whoever has to actually solve the situation or has to improve to support the situation? What will be your ask? Your main ask?
I would go to my initial suggestion of what the state should. The state should give up some of the ownership of these projects, and definitely it will find its way to be financed if it's driven by the private sector. So we should not continue to finance projects because they are sovereign. I mean, sovereignty of the state should be given up to a more efficient manager of the assets. Therefore, privatization will find its way to finance these infrastructure projects.
Yeah, I think it's very important to develop the Islamic financial markets, and I think it will be very much assisted by a very conducive environment in the domestic marketplace.
I think that's what we really would like to see. I mean, because for us, we are regulators. We are very much supportive on creating a conducive environments for Islamic finance, and I think the government has have done a lot, but of course we need to also increase the demand side, especially as I mentioned for local or global investors, and the government really realized that the kind of thing that we need, and a lot of things has been done by the government, but of course much more can be done to increase the appetite of the investors to invest in Islamic finance, especially for infrastructure financing, because I mean Indonesia is really needs those kind of financing. Thank you.
Yes, so I agree with what everybody has said. I think continue actually with the Sukuk programs. I think they do stimulate economic demand globally, and they do provide benchmarks against which to price for the private sector. I think stimulating the private sector by trying to crowd in private sector financing using structures and credit support instruments, I think will promote that, and then try and actually drive the size and scale of the local and international investor base. And so I think insurance is a logical place to start for that.
Okay, so thank you very much to our four panelists. I think it has been a very, very rich discussion. So thank you very much for all these insights on infrastructure. And now let me give the floor for the concluding remarks to my former colleague and friend, Samir, from the CFO of the Islamic Development Bank, to give us the closing remarks of the event. Thank you.
Thank you, Alfonso. Good afternoon, everyone. It's my pleasure to be here. Before I give my concluding remarks, I would like to thank World Bank CFO, Joachim Levy, for taking the initiative and collaborating with us. I think it has been very productive discussion, and believe me, it was a learning experience for ourselves as well. I also want to thank the Minister of Finance in Indonesia, Her Excellency Dr. Indrawati, and then also I want to thank all the panelists for sharing their thoughts, and of course the moderator, Alfonso. Thank you for doing a very nice job as a moderator. And I think before I forget, I do want to thank two people, one from the World Bank, Dr. Andy Jobst, who was on top of things of making sure that the event goes very well. Same time on the IDB side, my colleague, Dr. Sharif Ayub, worked very hard to make the event very successful. I'm really thankful for their efforts. Thank you so much. Now, I think one of the challenge of the closing remarks is that there's nothing new to add, because all of the things people have already stated, they have said, so it's very difficult to add something new. So I think what I would do, I will just try to summarize in general what has been said, and maybe try to bring them to a kind of a summarized form for you, so to take home some thoughts. I think, first of all, there is no doubt that there is a issue. Infrastructure finance is very much needed. There's no doubt, especially in both our member countries, both World Bank and IDB. I think given the challenges of SDGs, Sustainable Development Goal, and the importance of very weak, either deteriorating or non-existent of infrastructure in many of our member countries, and here I'm talking about many of our African member countries, countries certainly there's a need for infrastructure finance. I want to I just always say we are all talking about SDG, about the Sustainable Development Goal, but many of our countries, especially our member countries, were not able to meet the Millennium Development Goals, which are, we were in some of our African countries, we could not achieve those Millennium Development Goals. So there's certainly a need for infrastructure. But how do we do? And I think one of the main thing is that everyone is looking for out-of-the-box ideas, innovative ideas, new things to do, and also trying to see how we could diversify everyone's funding, how we could diversify the investor base. So all this thing is very much needed. I think one thing which I noticed that we did not, maybe I wish we had talked more about it, that what is the reason that why the conventional finance has not gone too much into infrastructure and why we have this gap. I think that one of the reason is lack of risk mitigation tools, which are not there because, of course, investors want to make sure that their risks are mitigated in a proper fashion. So I think the real challenge which I see is that we want to crowd in private sector. We want to have private sector to have more skin in the game. We want to bring partnerships, but then we do not offer them the mechanism of risk mitigation or mechanism of having a full transparency. So I think that is the one challenge. I think at the same time, I would suggest maybe the private sector crowding is also challenging because of the financial crisis of 2007-8, also plus the macroeconomic uncertainty which we are seeing and coming down the road. So all of these things are making us a bit more challenging. Reason I'm saying it because I think it has some relevance to Islamic finance, and the reason why I believe that, and we have all heard that why Islamic finance has a potential to fill that gap. One of the, of course, reason is core feature of Islamic finance being a risk-sharing finance rather than risk transfer finance, a finance which promotes real economic activity, creation of real assets, as well as the asset-based finance. So I think that is the one feature which does fit very well with the infrastructure, which is very, very important. Same time, other feature of Islamic finance in terms of its being promoting, social development, economic development, social justice, and ethical finance. And given that there's a more appetite in the market for either ESG or SRI style of investment, totally responsible, I think that it offers a very good value proposition. Now, I think from that angle, Islamic finance does offer a very good proposition, but question is, what needs to be done? I think what I would say that no one has denied that in terms of the theoretical content or the features, there is any kind of a gap as such. It's a very natural fit to infrastructure. The problem is, how do you leverage that potential? How do you unleash that potential, and what needs to be done? I think there are two important takeaways which we can see from this discussion. I think certainly there's a long way to go in terms of developing the enabling environment. I appreciate what Indonesia has done in terms of developing the infrastructure. IDB also was involved in developing the master plan for Islamic finance for Indonesia, and many of our recommendations were implemented, which we're very pleased to see. But I think that still needs a lot of work. Same time, I think some of at least in our member countries, when we look at least developed countries or which need infrastructure, like especially in Africa, we do see much more needs to be done. I mean, I think our benchmark should be look at from every participant, because they're the one who are in need of infrastructure. So I think certainly there is a great need for enabling infrastructure, making investor climate, increasing the investor confidence. And I think here a little bit of 5 seconds of theory, that when you talk about a risk-sharing finance, which is Islamic finance is, one of the key things to attract investor to risk-sharing finance is to eliminate information asymmetry. And how do you eliminate information asymmetry? That's when you develop the financial sector in a country. When you develop the financial sector, in terms of its regulations, its standards, transparency, investor climate, doing business, all that kind of thing, that reminds me that's what World Bank is doing. So in that sense, I think the role of MDBs are very important, whether it is World Bank or ADB or Islamic Development Bank. All of them are together, have to focus on developing this financial sector so that we could have a risk-sharing financial system which can then attract infrastructure finance. Now, this is not something which we can do overnight. It will take time, it will take effort, but I think we all agree it is worth doing it. I think the second takeaway was that increasing the awareness. And we totally agree, understand that there's a more awareness, need to be increasing the awareness of not only of Islamic finance, but also awareness of what needs to be done, and that includes financial literacy, having a more awareness events, knowledge increasing events, like for example what IDB has done with World Bank on this publication on infrastructure. That's a very good example of enhancing the awareness about these issues. I think towards the end, I would probably say that one way of probably moving forward would be maybe look at what Islamic finance has to offer on a purely value proposition. Not just because it comes from a religious background, it's come as Islamic or something. Look at a purely financial terms. I personally look and always argue that this is nothing but a structured finance. So if you look at a structured finance perspective, which has certain features of being asset-based and being risk-sharing, also has an ethical component and development component and social justice. So there is on value proposition, it has a lot of attraction. So I think one way of kind of looking at it, that it's not Islamic finance, but think of it as a structured finance which has many features, which being realized, recognized by many in the international global discussion platforms. So with that, I think I would conclude my comments once again, thanking World Bank for collaborating with us on this event, and thanking our speakers and the panelists and our audience. I was just wondering, I think Alfonso did not give a chance to ask questions. I'm sure they had a lot of questions, but thank you everyone, and have a good afternoon. Thank you.